Hi guys, what's going on? It's your boy Tyler, bringing you fundamental news from routers. Dollar ahead as inflation worries resurface after OPEC Plus surprise. The US dollar was broadly high as fears over inflation resurfaced after a surprise announcement by major oil producers to cut production further, with traders wagering the Federal Reserve may need to increase interest rate at its next meeting. Um, Cutting oil means they're cutting the supply. That means oil prices are going to rise. Um, when oil prices rise, it means higher inflation. Higher inflation might even go as far as meaning that higher interest rates. But only time's gonna tell, guys. Because right now the market is pricing in lower interest rates, and that's why we're seeing the dollar fall. Um, but should they increase rates again, that's gonna mean the dollar's gonna be strong again, and everybody's gonna run and go buy dollars. Right, let's go on. The announcement from the OPEC and its allies, OPEC Plus, comes after data on Friday showed U.S. consumer spending rose moderately in February after surging the prior month, with inflation showing signs of cooling even as it remained elevated. While receding broader contagion risks, positive developments in China, and expectations that the Fed is nearing the end of the tightening cycle should keep sentiments broadly supported. The oil price gain due to the surprise production cut is a fresh risk to inflation, said Christopher Wong, a currency strategist at OCBC in Singapore. Fresh inflation risks do imply the inflation fight is not over. The euro was down 0.44% to $1.0791 after touching a one-week low of $1.0788, while the Japanese yen weakened 0.46% to 133.41 per dollar. Sterling was down at $1.22 and 77 cents on the day. The dollar rose 0.32 against the Swiss franc. The dollar index, which measures the US currency against its peers, was 0.078% higher at 103.01, breaking past 103 for the first time in a week. The OPEC Plus cuts caused oil price increases of more than 6% on Monday. The cuts were announced even before a virtual meeting of the OPEC Plus ministerial panel, which includes representatives from Saudi Arabia and Russia, that was expected to stick to cuts of 2 million barrels per day, already in place until the end of 2023. Instead, the oil producers on Sunday announced further output cuts of around 1.16 million barrels per day. The two-year Treasury yield, which typically moves in step with interest rate expectations, was up 4.6% basis points at 1.408%. The yield on the 10-year Treasury note was up 2.9 basis points at 3.519%. Markets are now pricing in the probability of the Fed hiking rates by a quarter percentage point in May to 61% from 48% on Friday, but the end of the year expectations are priced in for cuts of 40 basis points. The Friday's report from the US Consumer Department showed that personal expenditure consumption expenditure index price rose 5% in February from the earlier down from 5.3 increase in January. A A measure of core inflation, seen as a better gauge of future price increases, came in a shade lower than expected at 4.6%. Additional data also showed US consumer sentiment fell for the first time in 4 months in February on concerns of an impending recession. Although the impact of the banking crisis was muted, city strategists said concerns over financial stability are fading, and any drag from tighter credit is likely to be both lagged and limited. Still, the recent experience likely will keep the Fed more cautious in raising rates in markets, more cautious in pricing hawkish policy. CD strategists said in a note, adding they expect 25 basis point hikes at the next three Fed meetings. The risk-sensitive Australian dollar fell 0.3% to 0.667 cents ahead of the high-stakes policy meeting from the Reserve Bank of Australia this week, with markets betting the central bank will stand pat on interest rates after 10 interest rate hikes. The Kiwi slid 0.62% to 0.622%, its biggest one-day percentage drop since March 24. In cryptocurrencies, Bitcoin last fell 2.43% to 27,703, and Ethereum fell 2.27% to $1,176. There you have it, guys. On the 3rd of April 2023.